there's a meeting, the National Economic Council meeting. Not sure whether it is over by this time, but at the last time they were on because the president had to step into that meeting over the issue of the new minimum wage. Government is yet to agree to an amount presented to them by the tripartite committee. Labour is insisting on 250,000 naira as the lowest amount or the least amount for the lowest kind of worker. But the government is proposing, government and the private sector are proposing 62,000 naira, I should say. I don't know what is 62,000 naira. And that has been this back and forth. The president had, in his broadcast, said he's going to send a proposal to the National Assembly, a bill to that effect, because it has to go through the National Assembly for it to become law. But he said he's not going to send it yet. He needs to consult further, which is why he's consulting at the moment to make sure that everything is put on track. Our debt burden is over 100 trillion naira. Macroeconomic indicators from inflation, which is food and headline inflation, they're in high numbers. Interest rate, quite high. FX volatility, I can go on and on. The numbers and the bearish zone. What exactly is going on? I want to make sense of that situation in the first part of the program. We've been joined on the program by an economist. Mr. Kelvin Emmanuel joins us from our Abuja studio. Mr. Emmanuel, thank you so much for coming on the program.
Thank you so much for having me. Good evening.
Good evening, Mr. Emmanuel. So two things are happening. Okay, one had already happened, which is the extension of the budget, 2023 budget. We had 2023 budget and we had a supplementary budget, all of which was pushed to 30th of June, which is tomorrow. But of course, the National Assembly has now extended the implementation to the end of the year. So we may be having 3 budgets concurrently. You may have to explain that later on the show. But let's start with the issue of the minimum wage. The president joined that meeting. In your thinking as an economist, what are the variables they will be considering right now, in your view, that should be the right variables to consider before they can come to an agreement which will not cause an implosion or an explosion, literally, from the end of Labour, maybe rejecting or accepting?
Thank you, Joe, for having me. I think that in the whole minimum wage debate and in the protest of the Nigerian Labour Congress, with due regard and respect to them, the Trade Union Congress, and considering the events that has happened in Nairobi in Kenya within the last 48 to 72 hours on the 2024 finance bill that was withdrawn by President William Ruto, and the fact that today, for good reason, Nigeria is a low-trust society, and anything anti-government is actually, it comes in the front burner. There is a temptation not to have an inclusive debate. There's a temptation not to give the government the benefit of doubt, because the optics and what I call moral hazard of some kind of expenditure that is not exactly emotionally sensitive and intelligent to the plight and suffering of millions of Nigerians, considering the inflation of food over 40%, unemployment, underemployment, and the exchange rate devaluation, it's made it very difficult for the government to present its position to the people, And I also think it's very important for Nigerians to understand that minimum wage is not only about the government. In the federal civil service today, you have about 720,000 federal civil servants in the register, even if you will argue that biometric verification will reduce the number of ghost workers in the system by thousands. For Lagos State, for example, out of 20 million Lagosians, only about 0.29% of the people in Lagos work for the Lagos civil service. That's about 58,000 to 60,000. So the question is, if we focus all our attention on the government, how about the private sector? How about the organized private sector? NASMI, NECA, Manufacturers Association of Nigeria, NASIMA, and the unorganized private sector. Are we talking about sections 3.1 of the National Minimum Wage Act of 2019 that says that if your establishment does not have up to 25 people, you're not bound by the provisions of the National Minimum Wage Act? do we need to reduce that from 25 to 5 to bring more people? Because small businesses that employ between 5 and 20 people form a major percentage of the workforce in Nigeria. Do we have to look at issues like employee casualization, which, to my surprise, National Assembly and the NLC are not even considering? Because today, as we speak, for the organized private sector, you have major companies in the manufacturing sector, in the financial services sector, where over 80% of their workforce are actually under contracts. HR outsourcing is a thing and is a major issue across the formal sector in Nigeria. Are we looking at issues like HR outsourcing, employee casualization? Are we looking at issues like the fact that not all states have the same economic conditions? What an oil and gas service contracting firm in Lagos can pay its workers, or a bank in Lagos can pay its workers, is not the same thing a filling station in Owerri, or a filling station or a hotel in Yobe can pay its workers. Are we considering that it's important for the states to negotiate the minimum wage based on the conditions in the states? Does it make sense to impose a blanket federal minimum wage across all states in Nigeria and the federal jurisdiction? Or does it make sense for the president to allow the states to negotiate their own minimum wage based on their own economic realities and conditions? These are the nuances to the conversation I've not seen. The whole debate since it started, since the NLC and TUC decided to go on a strike, has been on increase the minimum wage, increase the minimum wage. But do we understand that the government is actually not the only party bound by the Minimum Wage Act? Do we understand?
Okay, so, well, I didn't know you were throwing that question. Maybe you're throwing it to Nigerians. But as far as Nigerians are concerned, there are things they are looking at and they are not satisfied. The workers, I've had a conversation with Joe Ajero, the NLC president. We've had a conversation with Festus Osifo, the TUC president. And one of the things that you always hear in that conversation is the fact that government is not demonstrating some level of will to lead from the front. So if the country is in high debt burden, numbers are in berry zone, in the reds, we can call all the numbers that you and I are familiar with, from inflation to FX and all of that, nothing is looking good, at least for now, based on those two reform policies, given subsidy removal and the flotation of the naira. They are saying that governance, the government must cut costs, and the governors are not sincere enough. Now, okay, they are saying that subsidy has been removed. More monies are coming into the states. We're sharing 1.2 trillion. Sometimes we have as much as 1.8 trillion, and then we have to share so that there's no much money supply in the system. So for them, what is the excuse, or what is this excuse that states don't have the capacity to pay?
You know, Job, you know, at the expense of me being balanced, I stand the risk of, you know, people who are watching this politics today to say that I'm holding a brief for the government, but I'm not. You know, along with that revenue going up for the government, for the state government, the revaluation losses on FX, external loans that states took, has also gone up in terms of the principal they have to pay and the interest. I'm not holding brief for any state governor. I'm not also holding brief for the federal government. The pendency on existing debts, state debts, has also gone up. But this is not to take away from the fact that the governors have not presented a picture, which is what I called moral hazard earlier, to show Nigerians that they are accountable. There are state governors that have private jets on standby, and they pay thousands of dollars in rentals anytime they fly out of their states, either to Abuja or any other part of the world. Yeah? You know, in such very difficult time for Nigerians, maybe it's important for the governors to show example and lead from the front, like you say. No, for the sake of optics, to show the people that you are accountable to them. They elected you and the power belongs to them. Okay? But if we're going to look at the states, yeah, the finances of the states are not in very great shape. You know, most of the states are on life support. They depend on federal allocation. There are states where IGRO is actually less than 500 million naira per month today in Nigeria. And if you look at the the fiscal sustainability of states index, you see that somewhere around 22 to 24 states are fiscally not viable. Okay, so the question comes to, if you raise the minimum wage to 100,000 naira per month, on paper, it's the minimum wage. In reality, can the governors actually pay? Can they reduce the cost of governance? Yeah.
Kelvin,
can they focus
the argument,
the resources
Kelvin,
of the state? Can they increase the IGR drive? Then the question about IGR also comes into question. Can you tax businesses that are not making profits? Because based on the tax laws of Nigeria, any business that does not make at least 25 million a year cannot be taxed. So if you look at the index, for example, that measures the GDP growth rate in Nigeria, that has GDP growth rate less than population growth rate of 30% per annum, you see that consumer spending, business investment, you see that net exports and then government spending. On consumer spending and business investment, we've seen a drop because of demand destruction and the value of money today.
If I'm a bottom,
but on net exports and government spending,
can you hear me, Kelvin?
You've seen like an increase.
Can you hear me, Kelvin? Okay, if I'm a bottom. Okay, the argument again, let me speak on behalf of Labour, not necessarily holding forth for them and the people. Now, in their view, things were not like better or good per se, but before the policy of government, now the government has removed subsidy. Transportation has become harder. They floated the naira. Importation, we are a high import dependent country. Things have become so expensive, but their wage or their salaries, depending on how you want to make the argument, remains the same. Should they just be looking and be listening to excuses and excuses and excuses of government? Because people feel that they are being stretched to the limit. Look at what's happening in Kenya.
Hold on,
Kevin. The issue of taxation was just a trigger to bigger issues. And that is where we are playing around even in our country, if we're not careful. Don't you think so?
I don't think the people should look while, the cost of living has gone up drastically. As a citizen of Nigeria, I'm not exempted from the realities that you have today. I remember I was complaining to a few friends that I bought ketchup for 11,000 naira plus for one ketchup, tomato ketchup, and how that is ridiculous compared to what it used to cost like 2-3 years ago. I'm not exempted from the reality. I eat rice, I eat gari. I know how the price of rice has gone up, the price of turkey has gone up, vegetable oil has gone up. These are the realities of everyday Nigerian. So I'm not exempt from it, But I want us to understand, I want Labour to understand that the entire federal and state civil service, in my view, is not up to 5 million Nigerians. So that's why I'm coming back to the issues like, how do you ensure that small businesses, medium-sized businesses, and more established corporations, both in the organized private sector and the unorganized private sector, are complying to the National Minimum Wage Act? Because even if you raise minimum wage to 200,000 naira today, only 720,000 Nigerians in the register of the Federal Civil Service will benefit from that increase. How about the other 208 million plus Nigerians, or maybe less than 100 million Nigerians, that you can say are in the workforce of the country? What happens to them? So that's why we have to go back to the other parts of the debate about minimum wage that Labour and TUC are not paying attention to, because, they get more reaction and more buzz from going against the government. For good reason, by the way, for good reason. How do we pay attention to the other areas of the debate that ensures that if the minimum wage is increased to 90,000 naira tomorrow by the president, the National Assembly passes it and the president assents to it, that the living condition of the average Nigerian, like the barber on the streets, like the mason, right, like the laborer, like the filling station attendant, is actually impacted positively? That's the debate we should have. Because the civil service in Nigeria, the civil and public service, I'm not sure is more than 5 million.
Okay, let's get back to everybody now beyond, because the minimum wage is like a pointer. We can't go to companies and ask them questions. So that's why there is a tripartite committee for both the organized private sector, the organized labor in the public sector, and the federal government, as well as the state, are sitting together. But there is a concern I would like you to speak to as an economist. Now, what has happened is that there is, allow my late term, the point of equilibrium in terms of stability, new definition of stability has shifted. Stability in FX used to be between 600 to 700. It has moderated, it's stable. Now, we're talking about 1,004, 1,005. And projections are like stability will now be maybe around 1,000, 1,002. That means the quality of life has literally changed. How can Nigerians cope in this kind of situation? Because it will affect literally everything, as it has already affected.
Yes, the FX rate has affected everything, but you know, you need to understand that last year, this president, he had the option of either declaring bankruptcy, just coming and telling Nigerians that Nigeria is bankrupt, you know, we're going to go to IMF and beg, or embarking on the reforms that he embarked on, because Nigeria had like, you know, you had losses, swap losses, FX revaluation losses of anywhere around maybe 12 to 13 trillion naira, you know, and they had forwards they had to deal with, you know. The government had to decide, look, you look at all the subsidies, 7.5 trillion to service debt, nearly 100 trillion naira in debt, another 7.5 trillion to import petrol to Nigeria to subsidize importation of petrol under recovery. Is gone from DSDP to PPTA. Then you have about 3 trillion naira to, 2 trillion naira to service power. And then you have about 3.6 trillion to subsidize FX. That's about 20.6 trillion already. That's in subsidies. The budget is around 28 trillion. And then you have to pay payroll, the civil service payroll. So the question is, what do you have for CAPEX? Nothing. Which means that if you don't have for CAPEX, government spending part of growing GDP is not going to be impacted, and you're not going to have any growth in the GDP growth rates.
Okay.
You know, so these were the realities last year, and this is the reason why, for the fact that you had a situation where the CBN had swap losses to banks and revaluation losses, and he had forwards to pay, and the fact that he didn't have net reserves, not gross reserves, because anytime this topic comes up, the CBN spokesperson is always quick to point to the gross reserves. Not gross reserves, unencumbered net reserves. There's a law in central banking called the Guidotti principle that says that at every single point in time, your net reserves that are not encumbered must be equal to your balance of payment for 1 year. Nigeria's balance of payment for 1 year is around $7 billion. Nigeria's net reserves today is not up to $3 billion US dollars. Net reserve, not gross reserves. So that's the reason why you've seen that there's been a devaluation in the exchange rate, because you don't have reserves to defend the currency. And the CBN practically had to go and borrow money.
So is that why perhaps
draw down on...
So my apologies, is that why we're going for the hot money, the FPIs, and now it's biting hard on our local industry?
Well, you see, one of the unintended consequences of raising your MPR to align with your inflation, in what is called the inflation to interest yield curve, or the yield curve differential, you have the MPR at 26.25%, is that you also have to adjust your NTB stop limits or your treasury bill stop limits, you know. So basically, if you increase the MPR, you have to adjust the NTB stop limit, and you know, it's a natural consequence that investors will always want to come in because the yields are better for them and are more attractive. So that's what you're saying. You're seeing a situation where they want to come in, the central bank is trying to attract hot liquidity to the markets, to the coffers. You're also seeing a situation where the government is attempting to use treasury bill, open money market operation as a tool to mop up so much of money supply in the system, which is currently 97 trillion.
All right, Mr. Emmanuel, quite an informative conversation. We'll try, when we have another conversation, we'll try to break it down even further, because for the market woman, either in Sabon Geri or Mile 12 or Urwawat in Calabar or a Creek Road market in Port Harcourt, what they're interested in is how prices of goods and commodities and every other thing will come down. So whatever we speak in form of grammar in terms of macroeconomics doesn't make sense to them. How will things get better for them? They were paying XYZ yesterday, they want to pay XYZ today. Until we get there, no matter how much reform and praises we give in terms of our approach, wouldn't make sense to anybody. But I must thank you, Mr. Kelvin Emmanuel, always coming through to give us that professional insight on how these things play out. Thank you for coming on the program.
Thanks for having me.